Hello, everyone. Welcome. Guys, we'll get started shortly. Welcome, everyone. Welcome. We'll get started shortly. Welcome, everyone. Welcome. Welcome, everyone. We'll get started shortly. So, a beginner's class. Welcome, everyone. Welcome, everyone. Hey, Dean. Welcome, Dean. Guys, we'll get started shortly. Welcome, everyone. Welcome. We'll get started shortly. Welcome, everyone. We'll get started shortly. So a beginner's class or a beginner's class? All right. Welcome, everyone. Welcome. All right. All right. Welcome, everyone. All right, guys. Let's go ahead and get started. Hey, Dean, welcome. All right. I'm going to share my screen here. All right. All right. Hey guys, as there's some things I want to talk about this evening. Anything in particular you guys want to cover as new traders? Is anything in particular you guys have any questions on? Anything in particular you want to learn about as new traders? If not, um I want to go over this. All right. You guys should see my screen here, the four market phases. All right. The four market phases that every trader must know. All right. So, you know, through the week, right? And a lot of times, traders are somewhat confused about the four market phases, right? Um, as far as the chart, I think we understand the chart pretty well. But when it comes to executing the information, all right, um,
You bought it. You bought a
Sometimes it's perhaps not as clear. All right. So hey, Kawisi, welcome. Hey, Solomon, welcome. And Dean, welcome. All right. So I want to spend a little bit of time this evening going to the four market phases. And what we are going to do is um, we'll incorporate the four market phases with some live charts. Okay, with live charts, and I think this will be good for you guys. Okay, so the four market phases that every trader must know. All right, so the four market phases that every trader must know. You guys should have uh, printed this, right? Have a copy of it, right? Laminated. Okay, so the four market phases that every trader must know, right? So rather than just randomly, right, getting into trades, we want to follow a process, right? Whether it's a systematic process, right, meaning that you're using a trading system like the trading systems we have, right, and all our systems is based on this the same process, the four market phases here, all right, that every trader must know. All right, so we always start with accumulation. So understand accumulation phase will always start at the bottom of your chart. All right. So accumulation will always start at the bottom of your chart, right? Phase one. All right. The bottom left, right? So bottom left, the middle, or the right of your chart, like here. All right. So accumulation, right? We always want to buy on the break of resistance. So we'll buy on the break of resistance here. All right. That's phase two. That's the markup phase. All right. Reaccumulation phase is where we would, the price breaks new levels of resistance. We could add it to our position here. Understand that these are new buyers entering the market. Right. Phase three is distribution. All right. Where price doesn't make any higher highs or new highs, right? Break support. And then we have to exit the trade. So we would buy here and sell here. All right. Buy here and sell here. Markdown phase. All right. Markdown phase. Within the markdown phase, redistribution, where new sellers are entering the market. And we get to do that all over again. Hey, Gerald, welcome. All over again. All right. In the accumulation phase. All right. Now, I think where the confusion comes in with a lot of traders is identifying the right setup. Okay, so I think we understand this fairly well, right? The four market phases, right? Reaccumulation sometimes and redistribution sometimes is not as clear, but I think most traders understand the four market phases. All right. What I want to go over this evening, and I told one of our traders last night to do some homework, all right, on identifying, finding setups, trade setups with the perfect four market phases. Okay, so I want to go over that, what to look for, because I think this will help you guys, especially as new traders. All right, and I think this will put you far ahead with your trading. All right, so we are going to take a look at equity stocks. This on the daily time frame. You guys should see my chart here. It says Bull Master. Actually, we'll start with Stock Boss here. All right, and I want some feedback from you guys. All right. Now we're not going to focus on the stock itself. right? The symbol itself. We will not focus on the sector or the markets. All right. I just want you guys to focus on the markdown phase, right? The markdown phase, right? So we want to look for a really good markdown phase, right? And then look for that accumulation phase and then get into the markup phase. Okay. All right. So I'll call on you guys. All right. All right. So the first one here, what do you guys think of this one here? What do you guys think of this chart here? Because this is the work you guys are going to have to do. All right. So when you're looking at trades, when you are let's see here. So when you guys are looking at trades, looking at opportunities, guess what? It's going to be you. You're going to be doing your research. No one's going to be there, right, to help you. So you have to figure this out, right? All right.
Hi, David.
Hello.
Hi, this is Dean. Sorry,
Hey,
I'm
Dean.
jumping in. I'm in between two meetings.
Okay.
Yeah, but yeah, that one looked like a really good. It had a long downtrend.
This one right here.
Yes, yes. Looked like it had a. I can't see the month. Maybe. Oh yeah, I can see. Went a few months on a downtrend with
Okay.
little, very little um, noise or distribution. So it looked like a really good opportunity to buy in or get in at that buy signal. Is that
Yeah.
October? Yeah.
Yes. Very good. And what I'm going to do is I will make the dates and the price larger for us. All right. I
Yeah.
want to
I'm sorry.
spend.
I'm on my phone, so it's hard to see.
Oh, that's fine.
Yeah.
That's fine. That's
Yeah.
fine. That's fine. It's like the markets. It's never perfect. We have to go with the flow, right? All right. Okay. So let's settings window here. Font. Let's increase that to 18. All right. Okay, so that should help a bit. All right. Okay, so Dean said it's got not a lot of consolidation in the markdown phase. And why are we looking? Why are we paying attention? Hey, Ranjit, welcome. Why are we paying attention to the markdown phase? Why are we paying attention to the markdown phase? Why are we paying attention to the markdown phase? Anyone?
Yeah. I'm going to put my 2 cents in, and please correct me if I'm wrong, but it's simply that downtrend is so strong that what goes down is potentially going to go up, and it seems like there's not a lot of obstacle or resistance that it looks like it's going to potentially hinder a really upside on moving I guess to the right and up.
Okay. All right. Anyone else? Anyone else? Very good, Dean. All right. Why aren't we not focused on the markup phase, the distribution phase? Why are we concerned more about the markdown phase?
Mr. David?
Yes.
Yeah, we're concerned about the markdown phase because immediately the markdown happens, that's when the market reopens for opportunities. So getting a clear, chart of, like, the whole accumulation to redistribution and all that stuff, go through its rotations, and you know and the MACD goes down. So if I'm right, I don't know.
Okay. Thanks, Solomon. Okay.
Yes, sir.
That's good. All that's great. All that's great. So Dean, you're right. Solomon, you're right. All right. But what's the most important reason why we want to focus on the markdown phase?
Hey, David. This is Gerald. Hey, I think it's because
Hey, Gerald.
All right. I think it's because we have to have a establish the bottom point of the resistance, or is that right? The bottom.
Okay.
We have to establish it. Once we get it established, I think, and then if it starts going back up, we know that, hey, if it comes to this point again, if it drops below that, we know we shouldn't have been gotten into that trade. I think I could be wrong.
All right. That's good. All right. Thanks, Gerald. All right. All right. Let's think about this now, right? Let's think about this. Why do we want to pay attention? What's the one reason, right? And you guys gave some good reasons, right? But what is the one? If you were to give just one good reason why we should pay attention, right? Right? In the markdown phase rather than the markup phase, rather than the distribution phase, right? Accumulation phase. Why am I saying this is perhaps your most important phase?
So David, also what I see is like all the sellers really exhausted. I mean, all the sellers just were basically got out.
Okay, so then I'll give it to you. Hey, Arthur, welcome. All right, and write this down. Write this down.
Yeah.
Write this down. All right. I believe that the markdown phase, if there's one phase that is perhaps the most critical phase in the four market phases, it's the markdown phase, right? And the reason why, right, is that if we pay attention to the markdown phase, right, this is where you're going to get your deal. And what do I mean by your deal, right? That's going to be your low price. Your low price will always come in the markdown phase, right? Your lowest price, your cheap price, whatever you want to call it, your deal, right, is always going to come in the markdown phase. And I want you guys to think of it like this, right? Just like when you buy anything else, you buy real estate, you buy whatever you buy, right? You're buying a car, you want a deal, right? We want a deal. We want a good price. We want a fair price, right? Sometimes, it doesn't necessarily have to be a cheap price, right? But we want a discount. We want a discount, all right, on our purchase. All right. So that's what that is. That markdown phase is your discount. All right. So think if we mess up the markdown phase, we're gonna mess up our price, right?
It makes sense.
Yeah. All right. So this is your discount. If you bought here, if we're not paying attention, right, in the markdown phase, right, we could be buying up in here, right? But most importantly, when we're screening, trying to find these opportunities, guess what? If we don't find the best opportunities, we are not going to find, for the best markdown phase, we will not find the best discount, the best price. All right. And we went through some examples last night with Arthur with some of his trades, right? Where the discount, and I want you guys to think of this in terms of a discount. It changes everything. It changes the way you trade. It changes the way you think about trading. All right. We want a really good discount. And not every price chart will give you the best discount. All right. So when you guys look at the four market phases, focus first on the markdown phase. All right. Focus first on the markdown phase because we want the best discount. Okay. We want the best discount. So how do we do that? How do we find the best discount? So anyone, how do you guys think we'll find the best discount? And someone mentioned, go ahead, Dean.
Do you start looking at what sectors are trending or market is trending?
Okay.
From a
No,
high top level.
So just based on the markdown phase. So we're just gonna focus on the markdown phase for right now.
Gotcha.
Right?
Gotcha. Okay.
Yeah. So how do we know we're getting the best discount? Right?
Just buying it just after the markdown, it just started to take off. That's what like is the best discount rate.
Okay, Ranjit, repeat that for me, please.
So I'm saying like if the stock is already went through the markdown phase and consolidated,
okay,
then it's and it's going to break the resistance. That's what like we see that okay, it's going to break and it's going to go over where it used to be before the markdown phase. So that's how we can just like the graph you have right now, but it is right now at the midpoint. We have already missed the entry.
Okay, very good. Very good, very good. So it came down, right? Someone said price got exhausted, right? So we got a low price here. But how do we know that this is a low price compared to a different chart? How do we know? How do we know that this price here, this chart, right? This right here. So let's say, for instance, all the charts I'm going to show you, it's the same sector, same in whatever, right? But we are looking at different charts. How do we know if this chart, right, if this markdown phase is better than perhaps this markdown phase, right? And that we're getting a really good discount. We're getting the absolute best discount.
Right, so I mean, again, I'm going to throw my 2 cents in because, and I'll tell you why. But looking at the all-time high, or that looks to be the all-time high, and where the buy signal came in on October, it looks to have a really good potential with very little room of resistance up until that 240 area. It looks like it could ride all the way up to 240, have a little bump, issue, and then it could go potentially up to higher if your picture is blocking.
Okay. All right. Look at it. Look at this here for a second. Now we're getting deeper into this, right? Yeah. So we should know the 4 market phases, and now we're getting a bit deeper, right?
So David, I just to reiterate, like you were saying, like which markdown phase is better? So compared to which one? Sorry, I missed that part.
Yes.
Which 2 markdown phase? Are you showing it the same chart or is a different chart?
So a different. So as you go through, just like Otto did yesterday, right? He had 2 different stocks that we look at. So when you guys are looking to trade, right? You're going to go through symbols, right? And we don't care about the company. We don't care about the fundamentals. We don't care about none of that, right? All we care about is we're looking at the price action, price action, price action. Okay, so as you go through price action, and yes, it's a given that okay, the markets, the Dow, the S&P didn't mention the sectors. It's a given that everything else is in order. So we're just focused now. Let's focus on the markdown phase, the four market phases, right? But the markdown phase, that's where you're going to decide what to trade. All right. How to find the best trade. Now, look at this for a second. So let's say we've got this trade here. Here is the buy signal. And then here is the high. This is on the daily time frame now. So this is our trading window. All right. So the buy, we've opened up the font here. So you guys should see this here a lot clearer. So the buy signal here was $1.40, correct? That's $1.40. You guys see that? $1.40?
Yes, we can see.
You can see that? Okay.
Yeah.
Now, what's the high here? What's the high?
It's blocking. Your picture's blocked. I can't see it.
You guys can.
3.65.
Okay. So 365.
So I think I got your point. So it the markdown, the low and high, whichever has the highest range, that's how we say that's a best discount rate.
Yeah. 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 Right. That would help, right? So because what's your potential here? What, 100%, 130%, 140%, right?
Yeah, you can roughly assume like 1.6 to 3.6, like 2%,
Yeah.
2%, double.
Oh, yes. All right. So let's take a look at another one then.
David, before you move off of that, just so what I'm looking at is on the right side. Is that's accumulation markup?
Yes, right here is your markup
And
phase.
And when it hits around 220, 230, is that going to be a reaccumulation? Would I assume that it's going to be a reaccumulation?
So yeah, if
Right,
it
yeah.
hits right now, it's got resistance. It's breaking resistance right here, but it's got
Yeah.
it's got a purple
Yeah.
resistance line right here. So that's if it breaks through that, that's reaccumulation.
Okay.
But I don't want us to focus on that right now. We'll get to that.
Okay.
All right.
Gotcha.
So IAG buy is at 140 range. All right. So the range from the buy to the high, we're just going to go to the high, is about 365. All right. All right. Let's go to one. Let's find another one here. All right. This one here, EOG, EGO rather, EGO. What's the buy on EGO? What's the buy? What's the buy price? That is 6. Let's see here. 696, right? And what's the high here? The high, and we're looking at the potential, right? It's 1218. All right. So if we make it back all the way to the high, we would basically get close to 100%. So we'll say if we get lucky, IAG, let's say 140%. If we get back to the high, EGO, if we get back to the high, let's say 100%. Not exact, but you know. All right, let's keep going.
So David, quick question. So as it breaks each resistance, do we add to our position as it's going up?
Yes, you can add. Yes. So as it breaks new levels of resistance, that's reaccumulation, right? You can add. All right. We can add. Now we've talked about scaling in. or scaling up and then scaling out. So if you're scaling up or scaling in, you can add when the price breaks. There are two areas you can do that when on a pullback of the moving average, all right, or near support, or when the price breaks resistance, all right.
David, I have another question. Sorry, I'm full of
Sure.
questions today. So,
This is no, this is for you guys, right? So, and there's no incorrect question, right? So, all right, go ahead.
so
Then.
these same you've shown 3 or 4 different examples with strong markdowns. Does forex follow the same patterns, or do you see that same thing in forex with these strong markdowns and potentials, or is it a little different?
Forex will have a bit more volatility, right?
Mm-hmm.
Where it's not as smooth as this. All right. Some of the pairs, right, will have some of the major pairs like the pound dollar, euro dollar, the CAD will have really nice markdown phases. But forex is a bit volatile. It's more volatile,
Okay.
right?
Gotcha.
Now on the daily time frame, we haven't had a lot of, and we don't trade on the daily time frame. But on the 60-minute time frame, if you move it back forex to the 60-minute time frame, yeah, we'll find charts like this.
Okay.
All right. Yeah. But on the 240, because forex right now is consolidating, and it's been consolidating for a while. On the longer time frame, it's been consolidating for a long time.
Okay.
Long time. All right. All right. But all the markets will provide, depending on how the markets are moving, they will provide markdown phases on different time frames. Okay, let's take a look at this one here. So NIU. So NIU. Do you guys see anything different that's different here on this chart, on this markdown phase? You guys see anything that's different here on this markdown phase?
It's like a very smooth slope.
So it's very smooth. Okay, Arthur, very smooth. What else?
A couple of things. So is it between the 12 and the 8? I guess there's a little distribution. Is it?
Okay, what have we been talking about? What did we talk about with IAG and then EGO? What did we look for in those two trades? Two examples.
The discount.
The discount, right? So look here. What do you guys see with this chart right here? NIU.
Oh, good. It's a nice.
The nice what? Nice what then?
Hey, I see the potential.
You see the potential, right?
Yeah.
Yeah. Big difference, right?
Yeah, this one like from 3.4 to all the way to 28.
Yeah.
Like 25.
Yeah.
Yeah.
So David, sorry, I just walked out a little bit. So is that what we are saying here? To answer your question, how we know this is the best price? So this is what we look from
Absolutely.
how high it is
Absolutely.
dropping, and
Yeah.
so it's going to hit. So when it is right now is in consolidation and 3.46, when it's going to break this resistance, it will be, we are looking forward, it's going to go somewhere like 28. Correct?
Yeah. Yeah.
Perfect.
Yeah.
So
Yeah.
so we should be looking into selecting the trade which has more high, lower low and higher high, like over here, right? Rather
No,
than choosing the first graph, choosing this
no,
one.
no. We're getting off track now. We're getting off track. So we were
No,
on
no, so
track.
sorry. Just to recollect, not lower low. That is not. I'm saying like during October it was at 28, and right now October 21 it was 28, and October 23 it is 22. It is right now at 3.4. So this is what we are seeing, like from high to low, it has dropped down, and when it's going to swing up, it's going to go all the way to 28. So we should trade on this rather than other graph.
Okay. Okay. It's one answer. Let's keep it simple, right? Which has a better discount? All right. Which has a better discount? All right. IAG here. All right. Where we have a range. Let's go. We'll just so the
Oh, wow. Yeah.
here $1.40 to 360. That's
Mhm.
IAG. Then we did EGO. All right, EGO, right? 690 to $12.
It's a little
690
better.
to $12.
A little better.
And now we've got NIU right here, which is, let's say we get a buy signal right here
That's
on 434 to
crazy.
$28.
That's crazy.
Of course,
Yeah.
NIU, no brainer.
Yeah, absolutely. That's it. We just stop there.
Yeah. Right,
That's the
right.
better discount, right?
Yeah, yeah, yeah. Mhm.
All right.
And I guess, and you also have to take into account, because even though the discount looks so scrumptious, um, the most important thing is patience, right? Because you're not gonna get it tomorrow, right?
Yeah.
You've got a potential. You just need to be patient. Sit on that
So
thing.
yeah. So what would we all have limited amount of capital, right? So we all we all have whatever that amount is. No one have no one has unlimited amount of capital to trade, right? Even the hedge funds and big institutions, they all have they have a limited amount of capital, right? So we also have a limited amount of capital. So when we look into trade, and we don't talk about this a lot as far as a discount, but you guys want to look at that and try to get the best discount. Okay. All right. So if we look here, obviously now I think it's clear, right? I think it's clear to everyone that this is a better discount. This is a better discount right here, right? This right here. Now we haven't, there might be even better discounts, right? But we're just gonna stop here for a while. Right. Okay. What's the potential here? What's the potential here? So let's say we get it at $4 and it goes to $8, and we're staying on this time frame. We're doing all our analysis on the daily time frame. Well, now that is 700%. So now we've gone from about 140% with IAG to EGO 100%, and now we NIU at 700% potentially. All right, you guys see that?
Yeah, definitely.
David, how about instead of NIU, we should look at then Bitcoin. This is like right now it should be, if it breaks the resistance, that will have the similar higher potential to higher gain, right?
Yeah, absolutely. So and the point is this, when you guys look for trading opportunities, pay attention pay attention to the markdown phase, right? When you look, anything you look at, right? And just having that practice, just doing that practice, you'll be far ahead. First of all, you will not buy in the distribution phase or even in the markdown phase, right? You do this enough times, you're going to want a discount, and you're going to want a better and better discount as you get into this, right? You will train your mind to just look for a better discount, right? This is your potential here. This is it. This is your range here. This is your discount. This is your range. All right. And the problem, what could happen is this. Let's say we got in at EGO, and this is our range right here, and EGO is 100%. And guess what? If we are focused here, we will not see this here. All right. Oh, and we will not trade this. All right. And that doesn't mean that IAG is not tradable. This is tradable here, right? But I would much rather this range, this potential, this discount. I would prefer this discount. I would take this trade. It's just a trade. All right. It's just a trade. It's just a symbol.
Yeah.
We're looking for a discount, and we're looking for the absolute best discount, right? Absolute best discount.
Just real quickly, because I'm looking at your screen and I have my trading view screen up with each one of those symbols that you pull up, and I would have made multiple entries throughout that long drop, and just looking at this, I would have failed every time. Like, what happened? What happened? I'm looking at this, I'm like, oh my God. This is genius.
Yeah. And the system hasn't given us I want you guys to think of it like this, right?
Right. Yeah.
A lot of times we look at, okay, buying, selling, right? Break of resistance, break of support. But I want you guys, because the system didn't give a buy signal, right? It didn't. The last buy signal came in. Let's see here. The last buy signal came in at $52, right? It broke support, right? So we got a sell signal when the price broke support here, red candles. We got out at 42. We haven't had another buy signal, all right, since then. I mean, look here. And that's a good point, Dean, right? So where most traders, if you're looking at different charts, right, you would have, there were areas where you would have gotten in, but the system did not give a buy signal. Okay, the last buy signal was in 2021, January or so, February of 2021. It hasn't given another buy signal. So it's given us a better and better discount. Right?
That's really interesting, David. Just
It's amazing.
like it's going down and up and down, right? So the system is not giving a buy signal for a smaller profit.
No.
It's waiting for that. So just like in this graph, June, July, August, it was at lower low, then but it's still going up. So it didn't give a buy signal over there.
Yeah.
Because the system was knowing that it's going to go down further.
Yes.
So is that?
Yes. Go ahead.
One real quick question, David, because what I noticed here, just on another level, the big red candles were further to the left. And would that be the institutions just getting out? And then all people like me who were like losing money, we just start to just like bail out. Okay, I'm not gonna hold this. I'm not gonna hold this. But it seems like the big red candles are further to the left side. Looks like they sold large amounts.
Yes. So the institutions are dumping, right? So that's why we have the markdown phase. They're not shorting. Institutions don't short, right? I mean, there are few firms out there that specialize in shorting. All right.
Mhm.
So they're getting out for whatever reason, right? They're getting out of the trade. So that's what creates the markdown phase. All
Mm.
right. So they're constantly dumping shares, dumping shares, dumping shares. That's what creates the markdown phase. That's what creates your discount.
Mm.
I want you guys to think in terms of the markdown phase as your discount, as your discount. That's your discount. And you make money based on how large your discount is and how accurate you are in getting that discount. So we get paid when we buy, not when we sell, when we buy. So if we get a really good discount, all right, we'll do well. If we get a horrible, just like anything else we buy, anything else in life, right? Right? We get a horrible discount, we get a horrible price when we buy. Guess what? You buy a car, a vehicle, right? And you get a horrible price. You go to sell it back. Guess what? You might lose on that deal, all right? Or you might not make as much on that deal. Same thing here, all right? And didn't you mention it, right? Let's say those retail traders that bought here, right? That bought here, or here, or here, or here. Hold on. They did not get a good discount. They did not get
Mm-mm.
a good discount, and they're paying
Mm-mm.
a hefty price for not getting a good discount. All right. So if we open
Right.
this up, all right, we open this up on the daily time frame, we'll see here
You
it's
can.
not even 28 anymore. All right, it's $50 up here. It's $50 up here. All right. So when we open up, we see, okay, it's $50. Even better discount, right? All right. And here it is now at 346. And we could get an even further discount, right? It could go to $2. It could go to 50 cents. All right. Now we still have to do what? We have to wait for the buyers to come in, right? We have to wait. We know we have to do everything else. We have to be patient, but this is your discount. This is your discount. It fell from 50, right? So we'll compare this to IAG and EGO. I will wait for this. I would wait for this discount, right? And I would certainly track this and make absolutely sure that when it gives a buy signal, right? This is a priority here. This should be a priority. That
So
makes
David,
sense?
yeah, perfect. So this when it gives a buy signal, that's my question. So how can we know that it will not go further down?
Well,
Or
it could.
should we when it gives a buy signal, we get in, right? And how we
Uh-huh.
can confirm it's not going to go further down, or we just have to wait for the sale signal and we sell it off.
Yeah. So we'll know that if sellers come back in. So let's say, for instance, it gives a buy signal here. And you guys are seeing firsthand where um, the system is very accurate. All right. Now it's not perfect, but it's very accurate in not giving buy signals, right? All right. So if it does give a buy signal, we know that, hey, we've got real buying coming in, right? So, you know, the institutions are definitely coming in. So let's say we get a buy signal right here. All right. So range it to your point. Okay. And we entered here. And if sellers came back in, remember, right? We're always going to buy on a break of resistance, sell on a break of support. All right. Sellers come in, right? We get a sell signal to exit. We would just close the trade, take that loss. All right. And it might continue down this markdown phase. So let's say it goes to $2, right? And then buyers come in, breaks resistance. We might want to get back in here, okay, at $2 or 50 cents. All right. That makes sense?
David, can we check Baba after again?
Can we check what? I'm sorry.
BBABA.
Okay. Okay. This makes sense. Because we're done here. I just wanted to show you guys when you go through trades, whether it's this, whether it's forex, right? We know you guys are there now, so you know the markdown phase, right? You guys know that, right? You know markdown, right? Accumulation, markup, right? Next level is to get your discount, get your best discount, find the instrument, the symbol that's going to give you the best discount, right? No, not every symbol will give the best discount. Okay. All right. So that's the point here. Now, we take some work. We can't be lazy about this. It's not going to fall on your lap, right? You got to go through and you got to find them. All right. You have to go through and you have to find them. And our traders that do really well finding these, right? They go through them, and after a while, it's easy, right? But when you're new at this, you just go through. How much easier is it, right? Especially with heat seeker, right? You just go through, right? You just go through like this, right? And then you find the ones, right? With the good discount. Obviously, good markdown phase, right? And we've gone through that many times. But then look for the ones, look at your range, stay on the daily time frame and look at your range. This one here, right? $4, it's at $9 already, right? Find the range. All right.
So David, real quickly. So
yes.
On that one, that last one that you just showed, where it went from 4 to 9, how far back was the markdown phase that, the reverse?
All right.
This one
yeah. Here.
How far back was the markdown phase that allowed for that markup to happen?
Oh, this doesn't even have a really good markdown. All right. Yeah. The markdown. So this would not be a good example.
Okay.
Then right, yeah, very short mark. So this is just a breakout of a very tight consolidation. All right. So it didn't have.
So you don't go back a certain number of months, years, or time periods to say.
No. Just focus on your time frame.
Gotcha.
Just focus because your trading window, and that's a good question. Your trading window. So let's look here. Your trading window will give you your range. Okay, your trading window, because that's your potential, right? That's your entry and your exit is on your trading window.
Okay.
Yeah. Now we can always and we'll do this. We'll look at a weekly and a monthly for potential, but I'm just talking about your discounted price. Your discounted price, right? Stay when you're looking for the best discount. The best discount, stay within your window, your trading window. All right? Stay within your trading window. All right. There is another one here. All right. $8 is the buy signal, $24 here. And another thing too, right? If it's $8, then it's costing you more. Right? So if it's $1.50, right? All right, or $2 compared to $8, right? It's so you just pay attention to that stuff. Don't just randomly get in. All right. Here is one here. The buy signal is at 383. 383, and the high here, the potential is $19. All right, that's a pretty good one. All right. Really good markdown phase here, a bit choppy here. So you've got to get price. You know that price has to get above, right, 531 just to really before it can really get going. But I'll take this trade here. Right. So I'll take this trade even with resistance right here. So even with because of the potential here, right? Because of the potential and I'm getting a better price, right? I would take this trade here because of the potential, right? So let's see here. We have support here. So nice long, right? Consolidation, accumulation. It failed here, buy signal here, and now it's looking to test. But look at this here. If I got in here at the buy signal here at 394, look at the upside. Look at the upside. Okay. All right. So I hope this makes sense. All right.
Thank you so much.
Yeah, I hope this makes sense.
David, do you have an access to ASTR?
Was that Ranjit?
ASTR is a stock.
Okay, let me take a look at Artles first, and then we'll take a look at that. Artle, what was your symbol?
BABA. I wanted to know.
BABA?
Yeah. Overnight, it went to 80. Well, pre-market.
Okay.
And it kind of held it, and throughout the day, it touched it a couple of times, I think, and it's still kind of maintaining it. I was wondering if I should stay in the trade, or do you think?
Well, I can't give you that kind of advice, right? Because right, I don't even know what time frame you're trading it on. Okay.
Oh, I checked the monthly, daily, the 240, and then but primarily during the day it's the half an hour, 30 minutes, and the 5.
Okay. Okay, let me stop you. What is your trading window? So we have too many, we're looking at too many windows. What is your trading window? So what window, what time frame did you enter it on where the price broke resistance and you took the trade?
It was last night. The price when
Okay. Yeah. What time frame did you enter the trade on a break of resistance where it broke resistance, right? Remember the 4 market phases. This is on every time frame. So what time frame did you select where you went to a markdown phase, right? Broke resistance, right? So that you know now buyers are entering the trade, right? And then you entered the trade. What time frame?
So can you say that one more time?
Okay. So on what time frame did you select a time frame? Did you select a time frame, a trading window like here? Like this is the daily time frame. All right. So you enter this trade here. You're in this trade. What time frame did you enter on when the price broke resistance? If you don't have one, that's fine. Okay. But we can't analyze it. And you don't have an exit because if we don't have a time frame when the buyers got in, right, we will not have a time frame when the sellers are now getting out. Okay, so that's critical. All right, so we have to select one specific time frame like we're doing here, right? The daily time frame for monster scalper right here. We have the 240 minute time frame. All right. So we need a time frame. We need a time frame, right? On when we enter the trade. Otherwise, we can't analyze it because, you know, it's just random. It's random, right? Okay. All right. So work on a time frame. Work on finding, and I know some of the softwares that are out there, right? They don't have a charting like this where you have a specific time, a window. You have time frames, but it's different. You need a charting window, a charting window that will actually give you the time frame where every candle, right? Every candle, right, is a set of gives you a set of a time frame. All right. That makes sense, Otto?
Yeah, thanks for
Okay. And everyone else, right? So yeah, we need a time frame. So we need to know the time frame that we are trading on. Every single time frame will give you a different entry and exit. Okay. So this is a daily time frame. On the daily time frame, we do not have a buy signal yet. Okay, we do not have a buy signal yet. Okay. All right. Ranjit,
guys,
what's your symbol?
I have to
Ranjit?
say
Yeah. So
goodnight. I have to jump off. Good night,
Oh,
everyone.
okay, Dean.
Thank you so much.
Thanks for
This was
coming.
really, yes, this was really great. Thank you.
Okay, take care. All right, bye-bye. All right, Ranjit.
David, just a follow up like on your time frame question, you know.
Uh-huh.
So this is like the daily one, then we have weekly and monthly like that, right? So
Yes.
what time frame do you recommend to trade in? Or like does if we change it to weekly, this graph changes, right? But it's just like a macro view. And so
Yes.
if you change it to monthly and yearly, it's just a very mega macro view, correct?
Yes.
So what you recommend, which time frame we should choose?
Okay. All right. So when we think in terms of time frames, all right, when we use time frames in trading, all right, just think of time frames like your candle. Hey, this is a daily time frame. All right. So every candle is a day's worth of data. All right. So from open to close, so this is equities. From open to close is 1 day. All right. So equities, stocks right here. So the market opens at 9:30 a.m. Eastern Time, the US equity market, and it closes at 4 p.m. All right. That's 1 days of data right here. Okay. So 1 days of data from open to close. All right. If we did a 4-hour chart like we have here, right? Every candle here is 4 hours worth of data. Okay, that's your time frame. All right. If we did a 1-hour chart, let's do a 60-minute time frame. All right, then every candle here is 60 minutes worth of data. That's your time frame. So your 60-minute time frame. Okay, so if you guys look here, your 60-minute time frame is very different than your 30-minute time frame. All right. Then your 5-minute time frame. Okay. Then a 1-minute time frame. Okay. Then a daily time frame. It's all different. Okay. So your entry and exit will be different. See here, look at your daily time frame. Very, very different. Okay. Your weekly time frame is going to be very different than the daily time frame. Okay, see that? Very different. All right, and there are different buy opportunities and selling opportunities. Okay, on the different time frames. So if we are going back and forth, if we don't have a specific time frame where we said, okay, here, if we trade in, and we would not trade on the weekly time frame, and some traders do, and we've done it in the past with or forex dominator here. So here on the daily time frame right here, in monster scalper right here, okay, here was our buy signal here. Here was our buy signal here, buy on a break of resistance here, sell on a break of resistance here. That's the trade here. Bought here, got out here. That's on the daily time frame. All right. So on the daily time frame, bought here, sold here, we're out. Okay. Now it's going through the markdown phase. All right. So remember this right here for a second. All right. Now let's find a different time frame. So on the daily, right, we went long, bought, sold, got out. All right. Now let's go to the 60-minute time frame and see what's happening there. On the 60-minute time frame, we bought here, sold here, right? Look at this here. It's in a accumulation consolidation. All right. Perhaps getting ready to give a buy signal if it breaks here. All right. On a 30-minute time frame, let's see what we have. On the 30-minute time frame, it's breaking resistance. We have a buy signal right here. So on the 30 minutes time frame, we just got a buy signal right here. On the 60-minute time frame, we do not have a buy signal yet. All right. And on the daily time frame, all right, it just closed, right? It just closed, right? Right here. Give a sell signal to get out. And on the weekly time frame, it's still in the trade. On the weekly time frame, here is the buy signal here, and it's still holding on the weekly time frame. So we have 30 minutes, 60 minute, daily, even the 240, and now the weekly, giving us different buy and sell signals. You guys see that? You guys see that? Yes or no? Arthur, do you see that?
Yeah, that last buy signal would have been a sweet spot to buy there.
Yeah, but the point is this. The point is this. On every time frame, right, there are different entries and exits, different support and resistance levels. Okay, so that's why we need to focus on have one time frame. Okay, now you can have different time frames for different purposes. So that's what we do for equities. We'll have a daily time frame. Forex, we'll do the 240, sometimes the 60. But once you enter on that time frame, you have to exit on that time frame. All right. So if you're trading on the weekly time frame, you're gonna buy here and you're gonna wait, right, a long time to close that trade. If you're trading on a daily time frame, same thing, right? You're going to enter right on that break of resistance, all right, and you're going to sell on a break of support on the same time frame, on the daily time frame, right? We don't want to go back and forth with our entries. Now we can do that if we want to do some analysis, but even I would shy away from that. One time frame. All right. All right, guys, that's all I've got. We've gone over a bit. Any other questions before I leave? Any other questions? Any other questions? Okay. All right. So the what I wanted you guys to get this evening is when you go through your markdown phases, right? Look for the symbol that's going to give you. Now, make sure everything is correct now, right? Really good markdown phase. We want to make sure the markets and everything, but is in your favor, right? But look for your best discount, right? So look for the symbol that's going to give you larger opportunity, bigger opportunity, best discount. All right, best discount. All right, guys, I will see you guys tomorrow for trading in the zone, trend following and trading systems. and we'll hopefully you guys learn some, I think this is good. We don't talk about a discount, getting a really good discount in the beginners class. But I think if you guys pay attention to that, all right, pay attention to getting a really good discount, you'll weed out a lot of the stocks, right, that that's really not worth trading. All right, guys. I will see you guys tomorrow. All right, and have a good night. Take care. Bye bye.
Thanks, David.
Thanks, David.